Hey guys, how's it going? It's Andy from Magoo Investing. Happy Monday. So today we're going to get back into the breakdowns of all the different stock market sectors, but today we're going to slow things down. Instead of me talking about one specific sector, like when I've talked about energy stocks and I talked about 3 or 4 of my favorite from that sector, when we get to technology, I always talk about it's important to invest in things that you fully understand. When we get to technology stocks, these are the stocks and the companies that I understand how they run, and I'm so much more confident in them. So we're going to break them down even further from tech. This week I've decided is going to be the social media week. So today we're going to be starting off with one of my favorite platforms and one of my favorite stocks of all time, with Twitter. When I first got started in the stock market, the 2 companies I remember buying first was PayPal and Twitter. And Twitter has been a part of my portfolio for a long time, and I made a video back in August explaining why I decided to sell out of my position after it got to a very steady resistance. And now I wanted to talk about it because it's back to that same price level, and we're going to be going into earnings relatively soon, and I think it's a very exciting play to watch going forward. So in this video, I'm going to be talking about Twitter. I'm going to talk about the news events that have been moving it in the past year or so. Then we're going to be heading onto the computer, and I'm going to be talking about what I see on the charts because it is really interesting. With this price movement going into earnings, there's a lot of different ways that you could play this for a long-term investment. And then 3, I'm going to talk about how I would be trading Twitter going forward. This is a stock that I want to be part of my portfolio in the future, but it's going to be very curious to see how I'm actually going to go about it. So I'm going to explain what I'm planning to do towards the end of this video. But before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. Also, we're getting towards the end of October, and I have finally decided to get a pumpkin to put in these videos to spice things up a little bit. So with that out of the way, let's get started and talk about Twitter. Ticker symbol TWTR. So right now, Twitter is trading for $45.55, and it's up 42% year to date, which actually makes me very happy because in the past, Twitter has been known as a stock that has kind of underperformed the overall stock market and is pretty underperforming compared to a lot of the other social media stocks. And so in the past, in 2014, when it IPO'd, it dropped 64%. 2016, it only increased by 4%. And the past couple of years, it has done a lot better. But in 2019, it was up significantly towards the end of the year, and it was almost exactly a year ago, where they had this negative earnings report where they had a bug with their ad system, and they really missed the target when it came to revenue because of that bug, and the stock fell significantly because of that. So it has seemed like in the past, every year would have a pretty decent run up, and then something negative would happen and it would fall significantly. So I'm very happy to see that the stock has improved in 2020, even though it is no longer a part of my portfolio. I made my 45% profit on it, and I am currently out of it, but I am looking to get back in. So in their last earnings report, we saw some mixed numbers. From that earnings report, ad revenue was down 23%, but they had solid user growth. And so whenever I talk about social media stocks, the companies that I normally like looking at to kind of paint a picture of what the overall sector is looking like is by looking at Google. And I talked about this in my last video. Anytime Google releases earnings, you get a very clear picture of what's going on in that sector because they are the leaders when it comes to facilitating all the ads going out. And so if Google does well, you'd expect a lot of these other social media companies that rely almost exclusively on ads to make their money to do also pretty well. The problem, this is not a perfect world, and Twitter released earnings before Google. So Twitter released, they saw the 23% drop in ad revenue, and the stock fell because of that. And then a couple days later, when Google released earnings, we saw the same thing. So in a perfect world, Google would be the first tech stock to release earnings, so you can kind of paint a picture where these ad revenue expectations should be, and then you get the rest of the companies, but that is not the case. But from that earnings report, we did have the negative stuff with the earnings, but solid user growth is the most important part to me for a long-term investment in one of these social media stocks. And so from that earnings report, they had monetizable daily average users, which is the number of daily users that they can make money off of. And so that's the most important statistic in my mind for these companies. And so they announced that they had 186 million monetizable daily average users compared to the 173 expected by Wall Street. So this was a very nice beat and was a 34% increase year over year. This could be a result of the pandemic and people staying inside more and trying to connect with people because it gets very lonely when you're on lockdown for so long. And so that could be a reason why, and it'll be very interesting to see if they can keep up that growth going into 2021. But this graphic that I found shows their increase in monetizable daily average users, where they've seen an increase every quarter since 2017. So when I look for long-term growth, I'm not looking for revenue, especially when you look at something like Twitter. Their revenue history is a little choppy because of that bug that I mentioned. But This increase in daily average users is the most attractive thing to me and shows that the company is continuing to grow over time. And so Twitter is expected to release their earnings report towards the end of this month. And once we get to the charts, I'm going to talk about how that's going to impact my plays going forward, because I've been one of those people that does not like buying going into earnings because you have a lot of variability in the price expectations. A stock that normally moves a couple percent a week could jump up 15% or down 15% because of an earnings report. And Twitter has had a long history of having these massive moves. There was an ad bug back in October of last year where the stock was down like 15 to 20%. February or March of this year, the stock increased 10 to 15% because of earnings. And then this last earnings report, it moved a little bit, but not as much as what we've seen in the past. So I get very nervous going into earnings, and there are some specific ways I like to play earnings. It has to do with options, and I'm going to talk about that when we head onto the computer. But as of right now, I think Twitter is a fantastic long-term company to invest in. And the main reason behind that is because it has become a legitimate news source. During the last presidency, Twitter has gone from this place that mainly people are interacting with friends, some athletes, stuff like that. And now the president has made it so that it is a legitimate place to be releasing news and interacting with the people that politicians are representing. And so at this point, Twitter has become an important place that politics happens. And so Trump is tweeting stuff from his account that normally he would go through a news source or release it specifically through the White House, but now he's just tweeting it. And so that increases the reliance on Twitter as a major news feed. And for someone like myself, I get pretty much all of my news from Twitter. I interact with my friends, I get my sports news, I get my world news, and then I get my politics stuff all on one platform. And I think this is going to make it the long-term potential of this company is just so attractive because of that reason. And so I only expect it to increase in the future. People have talked about once Trump leaves office, whether that be in 2021 or in the next 5 years, they expect to see a drop-off in the people that are using Twitter. But in my opinion, I think the politicians and a lot of the content creators, the athletes, the celebrities have seen the importance of social media. And I don't think that those interactions with fans and people that they're representing is going to go away anytime soon. And if anything, I think it's only going to strengthen over time. Whether these politicians are very old and maybe they don't expect to use Twitter that much, but the people that are representing them and are handling their social media, they have to understand how important something like a Twitter is to the success of a campaign, a politician, an athlete, or a celebrity. So I only expect Twitter to increase over time. All right, so now that I've talked about the recent news and what I think about the long-term potential of the company, let's head on over the charts, and I'm going to talk about what I've seen with a recent support and resistance and talk about how I'm going to try to take advantage of that going into earnings. All right, so anytime I get to spend time looking at the charts and kind of giving my opinions on all these stocks is a fantastic day. So we're going to start making this a more regular part of the channel. But looking at Twitter, we're going to start on the 180-day chart, which is my favorite place to look for some short-term movement. And so I want to point out the area where I ended up selling. I ended up selling right around here at the end of August. I saw the support. We'll have to step back so I can show you where I saw that. But that comes all the way back to August of 2019 and then comes back to July of 2018. So I thought this was a very serious support. When it came up to that area on heavy volume, as you can see the spike down here on heavy volume, I decided that was a time to get out. And it paid off in the short term. Came back here, tested this recent high, and then bounced back up. But as we're seeing, the stock has come up and it's kind of bouncing around the up and below the support and resistance. So it's been tested from both sides. So this is a pretty serious area, and I feel very good that I charted that. So going into earnings, which will be in around 10 days, is going to be a very interesting time, because what I would be looking for is if it goes positive, I want to see it kind of hang around the support for a while and then push up. But then when we go to the longer time frame, we're going to have to slide over. I want to see if it can get up to this area. This is going to be my short-term price target. I'm actually going to extend this all the way to the left because it's also been respected over here. And so this is going to be my shorter-term price target. So if we see a lot of momentum coming from the next earnings report, this is where I'm going to be looking for a target. And so let's see what percentage that is. My guess is going to be like 15%. Yeah, exactly 15%. College degree coming in handy. So that's a pretty good thing to look for. As we were looking at these earnings, you can see we've had a lot of gap ups. We had this gap down, another fall down, gap up. This is a stock that definitely reacts very violently to earnings. So I think that's a realistic area to look for a short-term price target. If the stock does have negative earnings, maybe you have some problems with ad revenue, I'm going to be looking for the shorter term area down to the 39.50 area, just because it's been a recent support and I think it could bounce off of there. So if it comes down to there, if we have negative news, I will likely be entering here. On the upper end, I would like to see it hang around the support for a little bit longer. Going into earnings, one of my favorite ways to play earnings is by trading options. And so when we come into Twitter, in 11 days, that'll be expected to be the earnings. But I look over here and I usually want to see, especially for a stock that moves as violently as Twitter does, I want to see 10% if I'm going to be stuck bag holding. 10% is definitely generous. You can get that with some stocks. But the next thing I like to look for is to see if I can protect myself down to a recent support or resistance. And that's when you get to a huge problem of going into earnings near a support or resistance, because I'm not going to be able to get, what is that, $7 to get down to this support. So I don't see a lot of protection there. So the earnings play for options is not in the cards. So I'm going to wait to see what happens. If it falls down to this $39 mark, I'm going to be buying in aggressively. But until that happens, I'm going to be waiting on the sideline and just kind of see what happens with the earnings report, because it's going to be very interesting to see what happens there. Okay, so now we've talked about what's happened with the stock. We've talked about what I see on the chart. Now let's talk about how I would play this going forward. And so there's a lot of different ways that I could play this. And it's very interesting because normally when I go into an earnings report, if I'm going to make an options play, I want to be able to get as much money to protect myself down to a recent support or resistance. However, Twitter is sitting right at that support, and so I'm not going to be able to get the $6 or $7 needed to go back to the most recent support. So at this point, I'm going to be playing this from the sidelines. This is the company that has moved very aggressively after earnings reports. So if we see some bad numbers coming out from that report and the stock falls, there's a very nice price target that I have for the support side where I would likely take a smaller position. Twitter's a company that I want to have in my portfolio for the long term, and I ended up taking my profits recently because I thought that that resistance was going to be probably the short-term top. If the stock does go up to the upside, I did chart out that short-term price target back from 2017 as an area that I would look at to maybe take profits in the future. But at this point, I love Twitter as a company. I love Twitter as a stock. It's just kind of in a weird spot going into earnings that could be a huge catalyst that could push it through the support, which would make it a very attractive buying opportunity, or it could push it significantly to the upside and I might miss out on this opportunity. So at this point, you have to kind of make a plan going into earnings, because with a company as volatile as Twitter, things can change very quickly. So I have my alert set on the computer to see if it reaches those areas, but until that point, I'm going to sit on the sidelines and see what else happens. So thanks for watching this video. I appreciate all support. Let me know what you think about Twitter and all the other social media stocks, and I will be back in tomorrow's video talking about another social media stock.